Hello and welcome to our channel. In this video, I'm excited to share a simple yet powerful strategy that can help you make significant profits and easily identify key support and resistance levels. We'll dive into the amazing world of the Fibonacci tool and learn how to use this incredible instrument to your advantage. Stick with us for just a few minutes, and by the end of this video, you'll be equipped with valuable knowledge to boost your trading success. If you're new here, don't forget to hit the subscribe button and ring the notification bell so you won't miss any of our future videos. Let's get started and unlock the secrets to profitable trading. What is Fibonacci in Forex? Fibonacci tools in Forex trading are based on the Fibonacci sequence, a series of numbers where each number is the sum of the two preceding ones. These tools help traders identify potential support and resistance levels, retracement levels, and target areas where the price might reverse or continue its trend. The most commonly used Fibonacci tools in Forex trading include Fibonacci retracement, Fibonacci extension, Fibonacci time zones, Fibonacci arcs, Fibonacci fans. In this video, we'll show you how to use the Fibonacci retracement tool, one of the most important and widely used tools in Forex trading. While there are other Fibonacci tools available, their applications are not as commonly used. Step 1. Set up the Fibonacci tool. To access the Fibonacci tool, click the arrow next to GAN and Fibonacci tools on the left side and select Fib retracement. Then, on your chart, click once and drag your mouse upwards and to the right. Click again to lock it in place. Next, let's adjust the appearance of the Fibonacci tool for better usability. Click on the Fibonacci area and your menu bar will appear, and the settings menu will open. First, remove the numbers that go past 1 by unselecting them. This will make them disappear. Then unselect the background color to remove it. To reduce clutter, unselect the prices as well. Change the levels to percentages by selecting the drop-down menu and choosing percent. The Fibonacci levels will now be displayed as percentages. Move these percentages to the right side of the tool by clicking the drop-down menu under Labels and selecting Right to place the percentages beside each Fibonacci line. Click the drop-down menu under Labels. Again and select Middle. Now the percentages are aligned with each Fibonacci line. For better visibility, increase the font size to 20 by selecting the drop-down menu under Font Size. The numbers will now be larger and easier to read. Thicken the lines by selecting the thickest line option under Levels line. Changing the colors of the Fibonacci lines is optional, but I prefer to do so for better distinction. Change 0%, 23.6%, 78.6%, and 100% to white. Leave 38.2% as orange, representing a shallow pullback. Change 50% and 61.8% to red, highlighting these as the most critical levels. We usually remove the 23.6% and 78.6% levels, but you can keep them if they are part of your strategy. And that's it. Your Fibonacci tool is now set up with the ideal settings. If you're looking for a reliable and reputable broker with a proven track record, HankaTrade is your best choice. This broker has been active in the financial markets for many years. Let's take a look at the HankaTrade online platform. This platform will astonish you. You have access to a wide range of indicators and all the analytical tools you need. One of the remarkable features of this platform is its amazing indicators. You can add any number of indicators to your charts without any limitations. If you want to check important news and reports, you can easily access them here without having to scour other websites for market news and report release times. You can conveniently set up multiple alerts on various symbols and not worry about missing opportunities. Access to your account is easy, allowing you to manage your positions effortlessly. You can use this platform on both mobile and Windows devices. It's an amazing platform with a plethora of features and incredible tools. Don't miss out on this opportunity. Join this broker today and enjoy trading. I've provided the registration link in the description. Now let's quickly show how to apply the Fibonacci tool to your charts. In an uptrend, these are the Fibonacci levels we look for. First, the 50% Fibonacci level, which we call good, because it represents a significant pullback within a moving trend. Next is the zone between the 50% and 61.8% Fibonacci levels, which we refer to as great, because it indicates a deeper pullback within the trend. Finally, we have the 61.8% Fibonacci level, which we consider the best as it signifies a very deep pullback within the moving trend. Now, let's look at how these levels apply in the opposite direction during a downtrend. The 50% Fibonacci level is still good, providing a significant pullback point. The zone between the 50% and 61.8% Fibonacci levels is great, offering an even deeper pullback indication. Lastly, the 61.8% Fibonacci level remains the best because it indicates a very deep pullback within the downward trend. So remember these key levels when using the Fibonacci tool. 50% is good, the 50%, 61.8% zone is great, and 61.8% is best, regardless of whether you're in an uptrend or a downtrend. This method will help you identify optimal entry points and make more informed trading decisions. Why use Fibonacci? Fibonacci retracement levels act as a form of support and resistance as they represent areas of value within a moving trend. This means trade opportunities often present themselves at these Fibonacci levels. The reason is that major market participants, often referred to as the big boys, look to add to their winning positions at these areas of value. This, in turn, creates momentum for your trade, providing you with a strategic advantage. How to enter a long position. Let's break down the process of entering a long position using the Fibonacci tool step by step. Step 1. Identify the uptrend. First, identify your moving uptrend by spotting higher highs and higher lows. These upward runs are known as your impulse moves, while the downward pullbacks are called corrective moves. Step 2. Wait for a pullback. Wait for the price to start pulling back from the recent high. This pullback is your opportunity to enter a long position in alignment with the uptrend. Step 3. Use the Fibonacci tool. Take your Fibonacci tool and click at the recent swing low. Drag it up to the recent swing high, then move it slightly to the right so it stretches out across your chart. Click again to lock it in place. Your Fibonacci level should now be visible on the right side of your chart. Step 4. Look for key Fibonacci levels. Watch for the price to reach one of the key Fibonacci levels. These levels act as potential areas of value where the price may find support and reverse back into the direction of the uptrend. Step 5. Confirm with candlestick price action. Once the price approaches a Fibonacci level, look for confirming candlestick patterns that indicate a potential reversal. Some bullish candlestick patterns to watch for include hammer, morning star, piercing line. Step 6. Enter the trade. Once you have the candlestick confirmation and trend change, enter your long position at the identified Fibonacci level. Step 7. Set stop loss and take profit levels. Place your stop loss slightly below the swing low to protect against unexpected reversals. Set your take profit level at a previous high or a projected Fibonacci extension level to maximize potential gains. How to enter a short position. Now let's go through the process of entering a short position using the Fibonacci tool. Step 1. Identify the downtrend. First, identify your moving downtrend by spotting lower highs and lower lows. These downward runs are known as your impulse moves, while the upward pullbacks are called corrective moves. Step 2. Wait for a pullback. Wait for the price to start pulling back from the recent low. This pullback is your opportunity to enter a short position in alignment with the downtrend. Step 3. Use the Fibonacci tool. Take your Fibonacci tool and click at the recent swing high. Drag it down to the recent swing low, Then move it slightly to the right so it stretches out across your chart. Click again to lock it in place. Your Fibonacci levels should now be visible on the right side of your chart. Step 4. Look for key Fibonacci levels. Watch for the price to reach one of the key Fibonacci levels. These levels act as potential areas of value where the price may find resistance and reverse back into the direction of the downtrend. Step 5. Confirm with candlestick price action. Once the price approaches a Fibonacci level, look for confirming candlestick patterns that indicate a potential reversal. Some bearish candlestick patterns to watch for include bearish engulfing pattern, shooting star, evening star, dark cloud cover. Step 6. Enter the trade. Once you have the candlestick confirmation, enter your short position at the identified Fibonacci level. Step 7. Set stop loss and take profit levels. Place your stop loss slightly above the swing high to protect against unexpected reversals. Set your take profit level at a previous low or a projected Fibonacci extension level to maximize potential gains. Combining Fibonacci levels with support and resistance. Let's now take it up a notch and combine Fibonacci levels with support and resistance. Combining these tools gives you higher quality trade setups, meaning a higher percentage chance of success and the potential for greater profits. Let's look at this example. Can you identify the market trend? Yes, that's correct. The structure is bearish because we have a series of lower highs and lower lows. Therefore, we are looking to enter short positions during pullbacks. In this example, the market is in a downtrend with consecutive lower highs and lower lows. This indicates a bearish structure. To find a good entry point, I use the Fibonacci tool. I draw the Fibonacci retracement from the latest swing high to the latest swing low. As you can see, the price is at the 61.8% level. If you look to the left, this level aligns with a significant resistance zone. In the past, the price broke out below a support level and has now pulled back to this resistance area. In this situation, the Fibonacci tool helps you identify a very strong resistance level. You can see that a bearish engulfing candle has formed, confirming the potential for a downward move. I can now enter a short position. I will place the stop loss above the recent swing high and set the take profit at the latest swing low. Let's see the result. Let's analyze another example. As you can see, the price has reached a support area and formed a double bottom pattern, indicating a potential trend reversal from bearish to bullish. The price has broken through a resistance zone and formed new higher highs and higher lows. I will use the Fibonacci tool by drawing it from the latest swing low to the latest swing high. As you can see, the price is at the 38.2% Fibonacci level. If you look to the left, this level aligns with a previous resistance zone. The price has broken out above this zone, and it has now turned into a support area. Given the uptrend, we are looking for a confirmation to enter a long position. As you can see, a bullish engulfing candle has closed, providing the confirmation we need. I will now open a long position, place the stop loss below the recent swing low, and set the take profit at the latest swing high. Let's see the result. Thank you for watching. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more valuable content. Don't forget to hit the notification bell so you never miss an update. We'd love to hear your thoughts and questions, so drop a comment below and let us know what topics you want us to cover next. Thanks again for your support, and we'll see you in the next video. Happy trading!